Hello, my name is Ben Nathan and I'm the Chief Fund Manager within the Forex Mentor Fund Trader Academy live classroom. Now, I want to talk about losing streaks. Now, losing streaks are something we all have to deal with. But the chances are, if you're struggling as a trader and you're trying various different approaches, various different strategies, you may be looking at your losing streaks in a wrong way. So, as crazy as it may sound, how you view such times, i.e. your losing streaks, will have an effect on your overall success as a trader. So, let's take a look at a fresh perspective and how you should be viewing your losing streaks.
So, when is a bad week actually a good week? Well, first we need to get something very, very clear in your heads. Okay, I want you to absorb this. The more this sinks into your mindset, the better you'll be as a trader. Losing streaks are a normal part of every single successful Forex trader's job. So, to repeat that, losing streaks are a normal part of every successful Forex trader's job. So the difference between a successful trader's approach to losses and a failing trader's approach to losses is simple, and that's perspective. So what should our perspective be when dealing with losses? Well, there are three key areas to look at when it comes to dealing with losses. 1. How did your losses compare to your wins in terms of size? So that's your risk to reward ratio. Did you manage your trade perfectly in line with your rules? In reality, how much of an effect did the loss or losing streak have on your equity? What does a bigger picture look like? So, if these areas are correctly addressed, a losing streak or a losing week doesn't necessarily mean a bad week. So, let's have a look at an example of that. And what I'm going to do, I'm going to go through the trades that were called live in the Forex Mentor Fund Trader Academy last week. So as you can see, it was a quiet week. As you know, economically, because we look at fundamentals as well as technical setups, economically the news was dead. There was just nothing out there with significant meat on it to be traded in the intraday. So as a result, we took 3 trades of the week, which was a bit quiet, and every single one of those trades hit stop loss. We got stopped out on every single one of them. So would that count as a bad week, do you think? Have a think about it. Would that be a bad week? Let's elaborate on what happened with those trades and have a look at the amounts that were lost. Remember I said we were stopped out on every single one. Trade number 1, we lost 8.4 pips. Trade number 2, while we were stopped out, we'd locked in 4.9 pips. Trade number 3, we lost 8 pips. So overall, we lost just a few pips. And actually, the overall loss on the account was only 0.3%. But there's more to this than just what happened this week. Remember, the point number 4 is looking at the bigger picture. So let's have a look at what's happened this month so far in the Fund Trader Academy. So as you can see, we've taken several trades. Okay, and as you can see, if you look at the gain and loss percentages, well actually we're up 2.72% for the month. So rather than having a losing week and thinking, okay, well, we've had a losing week, we've lost 0.3%, actually, throughout a week that's been very, very tough for all traders due to the fundamental state of affairs, actually, we've managed to hold on to most of our losses there. So we've managed our risk so tightly that basically, you know, we've lost 0.3% of our equity, but overall we're still up by almost 3%. So actually, pretty good week, not such a bad week after all. So let's take a look at those key areas again. So how did the losses compare to the wins in terms of risk reward ratio? Did we manage to trade perfectly in line with your rules? Yes. In reality, how much of an effect did the loss have on equity? Not much, 0.3%. What does the bigger picture look like? Obviously we're up. So the actual risk to reward ratios are averaging at 2. Average loss 10 pips, average win 21 pips. Actually, the account's pretty healthy. And while initially it may look like we had a bad week, actually we had a great week because we managed to hold our own throughout the market. We didn't get tossed around by those markets, and we actually held on to most of our profits, trading safely. So hopefully that gives you a little bit of a new perspective or a new way you can look at losses, and hopefully if you can get that into your head that it's part of a normal person's trading day or trading week or month, if you can get that in your head that that's normal, from a psychological point of view, your trading will come together much better. So feel free to come and learn to trade with us. You get to shadow a professional full-time Forex trader. You can connect, interact and learn from us, and from that we'll help you become consistent and profitable. Now, we don't expect you to have to risk any money by signing up straight away at full price. You can learn to trade with us live now for just 1 cent, and you can sign up to take for the open house, which takes place between the 28th and the 30th of January 2014. So the reason why we charge you 1 cent is just to separate the serious people about such an event from the people who are just there just to see what it's all about. We want serious traders here, people who are serious about bettering themselves as Forex traders. Okay, so we just charge that cent just so we don't get any people lying about who they are. It's forexmentor.com/FTA/trial. Following that open house event, we'll be doing a trading boot camp where we'll be teaching you how to get hold of your trading psychology, and that's on the 31st of Jan 2014. Thanks, guys.